before we get started, it's wonderful to have everybody join us, and I hope that it provides a good interlude in your day to actually think. Sometimes they talk about sort of thinking on your business rather than being in the business. So what we're hoping is this really creates that space. What would be fantastic is if everybody joining doesn't mind just checking they're muted and also turning your videos off for the first part of the conversation, because that'll mean that we can, and if you, in your settings, if you actually change it to, in your view, if you change it to, I think you can do it so that it says just show only video participants. You will be able to, yeah, so if in your video settings, to the right of the video bit at the bottom, there's a little up arrow. If you go into that, you'll see that, well as the wonderful touch up my appearance button, which I think is the best invention ever, if you haven't found that yet. There is also, if you go down, there's one that says hide non-video participants. And so that lets you just actually get your screen so that you can focus on those in terms of video. And then if you look at the screen and find that you're still in the video, you can just go in and stop your video. Otherwise, you might be invited to present in the first part of the conversation, which might not have been your cunning plan for this lunchtime. Just giving you that in terms of your setup. So yes, wonderful. I have to say it's really brilliant being on a group of fabulously tech savvy people who are able to cope with all of those bits at the start of the session. So in terms of just some housekeeping bits, just to sort of set us up, we really wanted to create this space, as I said at the start, so that we could really have that sort of step back. Let's think on our business. You know, we've been through this period of seismic change. For many of us, the sort of ongoing day to day of, well, how do we address this? How do we deal with this? Drags us into an awful lot of the detail. And yet the opportunity right now is, well, what are the really significant changes that we could actually think about as we adapt to a world that has created opportunities to shift and change in probably once in a generation sort of opportunity. So this is the sort of space that we wanted to actually create for that thinking for people at C-suite level within the organization. As we're inspired very much by Tortoise. I do recommend their ThinkIns if you've never attended them. It's the slow news organization, which really creates a space for people to actually really properly think about these things. And we're going to set up this conversation so that it's going to be a conversation for the first 30 minutes. And we will be recording that because a lot of people have said they find that really exciting. And then if you can add any questions, observations, experiences in the chat function as we go along. I am going to be moderating and I shall keep an eye on that. And then after the first 30 minutes, we shall then really come back to really opening out the conversation. And that's what we really want to create, is that space where people can actually share your experiences, to ask questions, to really sort of think together on some of the big issues facing those really focused on serving people in vulnerable circumstances, where that group is expanding massively. So for that second part of the conversation, we won't be recording because we want to respect that Chatham House capability that you can really join in. And in terms of, I'll set it up again when we get to that bit, but I'll be keeping an eye on the chat as we go through. So I will direct message you if I'm going to come to you directly from something you've said on the chat that I think is really interesting. But equally, when we get to that bit, if you're like, hey, I'd like the mic, I've got something I'd like to develop or share or ask, then at that stage we can, with you raise your hand, or draw as many people into the conversation as possible. So if you want to sit back and just reflect and listen, that's okay. But if nobody joins the conversation, I know that Faisel, Fred and I can keep it going, but it would be a shame, because I think the spirit of this is let's really get the collective learnings that we can. So with having said all that, let me move us into just brief introductions. So I'm delighted that we're joined today by Frédéric Nze. who Faisel always calls Fred, so I don't know if I'm taking a liberty or not, but we'll let them clarify that as they get into the conversation. So Frédéric founded Oakam in 2008 after a career in data science at American Express, GE Capital and Barclays Bank. So a wealth of experience in how we actually really use data to deliver financial services. And before Oakam, he founded Heuristics, which is a risk and data analytics boutique, which was acquired by Capita. And then since then, he's been on this phenomenal journey and is going to really explore with us this whole, how do we actually, take a business and adapt a business model, and what are the lessons, what are the leadership lessons that we can take from it? And he's going to be taken through that journey by the amazing Faisel Rahman, who many will know is CEO at Fair Finance and has got a wealth of experience. I always enjoy my coffees with Faisel because I come away sort of my head buzzing with ideas and always feeling slightly inadequate as well, which is he may not know that, but he does now, and I love how he just sort of smiled at that. So you now know, Faisel, that I'm always in awe from our conversations. So without further ado, I'm going to hand over to Faisel, who in this conversation is going to be very much I don't know whether you're going for a Jeremy Paxman or a Jenny Murray, or I'm not kind of sure what vibe you're going to take on this, but I'm going to turn off my video as well. And we shall leave Faisel and Fred to really take us through a journey of exploration. And as I said, do put any comments, ideas in the chat as we go, and I'll keep an eye on it. And I will be returning later on to expand out the conversation. So Faisel, Frédéric, welcome, thank you, and over to you.
Thank you, Sasha. I'm not sure we're going to go for Jeremy Paxman. I'm going to try and avoid the James Corden, but hopefully the conversation that Frédéric and I will have some interesting insights for everyone, both from an operational and from a personal and leadership perspective. It's the great pleasure I have today of talking to Frédéric, who I've known since 2007, actually, when I went to the opening of the first Oakam store in Walthamstow. So it's a long, long time that we've known each other. And over that time, Frédéric has been a kind of a confidant, somebody who I've been able to reflect ideas on, but has also been on a very similar journey to the journey that I've been on. We sit in slightly different camps, but we serve often the same customers, and actually I think for the same reasons. And so I have a huge amount of respect for what he's achieved, and it feels like a great pleasure to be able to share some of the insights that I've learned from him with the rest of the community today. But before we dive into this kind of conversation on the digital journey, the transformation, the development of Oakam, I thought maybe, Frédéric, you could share a bit about yourself, give us a bit of background. I think people know about Oakam, but maybe they don't know the detail about it, the history and the scale and the operations. Maybe you could just share that with the audience first.
Okay, thank you for inviting me today. So personal background, I'm originally from Congo in Central Africa. I was born there and grew up there up to teenage years when I moved to France, hence the strange accent. In France, I studied mathematics, then I went into the, Sasha mentioned earlier, the data science or data analytics industry, first in the defense sector, with a French aircraft manufacturer, and then, with financial services, Amex and others in the UK, in the US, and then back in the UK in the early 2001 with Barclays. So I've been in this sector for a long time. Because my background, having grew up in Congo, I was always aware of the gap there is to serve people that are in the informal sector. So in a strange way, when I left Barclays, I wanted to create an MFI dealing with how we get alternative data to help people in the informal sector. But because the UK was the place I had a team, the UK was the place where I could raise money, I ended up creating a microfinance in the UK. But my plan was to go back home. So I hope that at some point I'll be able to reconnect these things. So that's the driver, is I can see the impact of financial access in places where it is denied. And I was surprised when I came to the UK and US compared to France, where the welfare system sometimes not as supportive. When I was working at Barclays, I was very surprised to see the level of exclusion there was in terms of access to bank account, basic bank account. and as a result, the level of exclusion in the lending sector. So I set up the first company that was data analytics because I didn't have enough money to set up Oakam, and then raise through the profit of that business. And when we sold that business, helped set up Oakam. So a little bit about Oakam. We've lent now over the last 13 years just over £400 million. We lend small amounts, so our loans start from 100 and they go all the way to 5,000. We started by doing lending and not many other things. So in the early days, we were doing telecom card, prepaid card, etc. We focused on lending, and we gradually found that our customers wanted, some of them just a loan, just cash, but quite a lot of them wanted a loan and a way to graduate into something cheaper and better or bigger, and so building credit. So we have, in few different ways, help our consumers or customers build credit, and we're trying to wrap that up into a product that we call Credit Build, and lending is one of the components. So we'll come back to that later. So a little bit more about Oakam. We've processed about close to 2 million applications in the life of the company. We granted more than 1 million loan. Our customers are mostly female, so 60% female, 40% male. They're mid-30 in the average age. 30% are pure benefit, but 70% are employed. And we generally deal with people that have an issue where credit data is failing them. So it's not necessarily that they have poor credit, as they either have no credit or quality of the data that is out there with the credit bureau is not enough for them to be automatically processed by mainstream lenders. They also have sometimes poor KYC, so they might be living in a multi-adult family where they have no utility bill to prove where they're living. And then stable source of income, if they're 0-hour contract or gigster, or low income simply, and they want to borrow a small amount, which the main banks don't lend to. So if you want to only borrow £100 and you don't need more, sometimes it's difficult to get that small amount. So that's about Oakam. The reason why we're talking today is because we started as a brick and mortar business. So we were completely, we were tech enabled, but we were brick and mortar in terms of distribution and servicing. And we've moved to a completely app-based business.
Yeah, that's very much the journey. I mean, it's funny how you describe the customers. And in a sense, when I came back to the UK from Bangladesh, the issue of financial exclusion wasn't something that people talked about here. If it was in the words of the unbanked. But one of the things I've learned is really that it isn't really about people being unbanked. It's about them being underbanked, and they're often quite sophisticated users of finance. And so one of the things I observed, we opened branches across London, and you went through that journey as well, is that often we only had one touch point with the customer. And I'd love to get a sense from you. You started with one branch. We met when you opened Walthamstow, and then you expanded the branches across London and then across the Midlands. And today, when I talk to you, you don't have any branches. Actually, you have a digital app, and maybe you can just talk about that journey, because I think there's some interesting insights that I'd love to reflect with you on that. If you just share how why did it happen? How did it happen? And what have you learned as you've gone from a multi-branch lender to a completely digital offering?
Yeah. So I think the branch where it was our brand was where we were housing our staff. This is where we were actually the most important activity we were doing was interviewing customer to establish credit risk. But the branch was always a limitation because it was in terms of catchment area. We were not able to serve all the customers we wanted to serve. So when we started the business, we were 100% migrant business. So Oakam was, we didn't serve the UK working poor, if you want. Our first year and a half, all our customers were Eastern European, Brazilian, Nigerian. So they were people who have been living in the UK for less than 5 years. And as a result, they had no data here. So they didn't exist. Yeah. So the branch was a way to reach out to these communities. So we looked at places where there was a high recent registration of the national insurance number. And that gave us a hint that it was a lot of migration. So we went from London to Midland, as you say, to Northeast and Northwest at the end. We had 30 branches across the UK. And but then the challenge was that, we always had this funny story of, we were forced to open a call center because, for example, we started with Polish in the UK, and someone was very happy with the service and they talked to their cousin in Northern Ireland, and we get a call from Belfast saying, I want to, I want to get a loan with you, and we can do the interview. So we created a virtual store, so to do the same thing on the phone. Then, we saw that some people were coming to our stores, having driven 3 hours to come down, and we thought like, this is crazy. This is quite a high transaction cost, but that's because they had no other solution elsewhere. So when we wanted to scale our branch network, we realized that it was very expensive, very slow. You had to tie up with long-term leases. So for us to become national, it was a significant challenge. Yeah. So we tried different way of thinking about it: franchising, kiosk, partnering with retailers, etc. All of them had significant challenge when we're dealing with large capital, risk underwriting, KYC, all these different things. So in 2015, we started to see that a lot of our customers were walking into the store with a smartphone, and they started to complain to the fact that they were happy to come for the first loan, saying, hey, I'm happy to come down for the first loan. I understand that, I don't exist anywhere, but when I've done 3 loans with you, why do I still need to come here? Why don't you have an app? So we at that point, I think the, UK smartphone penetration tipped over the 80%. And we decided to hack an app very quickly. And we were surprised by the success of it. So in 3 months, we launched the app. Following 5 months, we had 65% of our customers using the app. And then we had empty store syndrome. So we had stores that were not visited by repeat customers anymore, and they were only visited by new, but it was a complete different, sense feeling in the business. We also had underproductive workforce, because we had 180 people across stores that were not busy enough, because now the repeat lending was done on the app. So that was the first step of, we thought let's respond to a requirement from customer, and that response was taken, so quickly by the users, that we were left with a business that was, suboptimal. And we had opened the Pandora box, and we had to just go and do, commit to the full digital transformation, if you want to call it. For me, it's it was probably like a digital reset. It was not a transformation. I'll talk about it in a second, because, the reality is we haven't transformed much. We had to reinvent next. We ended up running 2 businesses in parallel.
Yeah, that's interesting, because Fair Finance I think we started serving customers online in maybe 2015, 16, and it really, it increased the scale of who could come to us and why they came to us. And we ended up with, our branches using mainly for existing customers, and then a very small number of new customers. And so we had this challenge of, we have 3 staff members, maybe 4 staff members, 1 falls ill. We can't open the branch. It becomes this logistical challenge, and actually it's been quite hard. And we only have 6 at the time. We only had 6 branches, and we've been thinking about how to use the branches more effectively. But one of the reasons why we kept the branches for a long time is that we thought that the branches were a place that we built relationships with customers. It allowed us to gain some kind of insights into that. And I wonder, from your perspective, does the relationship change, right? Like, you engage with them online, you use the app quite a lot. Has the relationship changed? Has the data collections changed? What has made it not just scalable, but actually useful?
Yeah, this is probably the toughest. So we had 2 tough challenges moving to an app. The first one is it was very good for customer servicing, and it was very good for repeat lending, but it took us a while to actually make it work for a new customer. So when you have to establish the relationship with a new customer and understand, fraud prevention, all these other things, the digital approach was suboptimal to the face-to-face approach for at least 2 years. So we were still running stores and in parallel, and our best underwriters in the stores were performing significantly better than anything you can do with, AI, etc. Yeah. The second challenge is the one you pointed, is the relationship. Is one of the reasons why the business was successful is we were very well embedded in the community. We had a very high referral rate. We could offer services that were not priced. So in our stores, you were also receiving things like, if people wanted to do, needed any help on their administrative process, so they wanted to do, their tax return or their claim benefit, etc. We were helping them do all the paperwork, and that was not charged. We were doing some financial education that was not charged. And so all of that, reinventing that in the UX on the mobile app was very tricky. So what we found is, as we were going digitally, we did very well transactionally. So we were able to deal with the whole country. We were able to do things much cheaper than having a branch network. Okay, it's fine. But then we didn't have the same intimacy we had with customers before. we had a very different type of intimacy because we were in the pocket of our customers. So instead of being, we were 24/7 in their pockets. So some of our customers were checking the app every day or more than once a day, but you needed to create the content. And we were now flooded with very different type of data. So, the data we had before was in the head of our employees. So, as an employee, I would know Faisel very well. I knew your preferences, even like what type of coffee you drink, etc. We had a good conversation. You would refer, friends and family. So when a friend from Faisel came to the store, I could say, oh, everybody has seen from Faisel, they pay very well, so life would be easy. But all that data was in my head as an underwriter. So we lost all of that, but we gained many more data points, 10,000 more data points. At the start, we didn't know how to use them. So very, very different challenge in terms of underwriting. We're still, I would say we're still 50% in terms of reinventing relationship. Creating intimacy on a mobile app is not an easy task. And that's where we've been using things like, building your credit score, gamification. So using some of the behavior nudges which we have tried in the store in an app environment.
And that's a really interesting, like a 2-year transition is pretty tough, right? And there's a bunch of questions around people that I'd love to get into as well. But just before that, like one of the things I noticed, when we started putting our applications online, I was really worried for Fair Finance that some of the conversations we had in the branch were about what you could broadly call good financial behaviors. Encouraging people to do the right thing, getting them to understand not just the process, but what makes a good customer. And some of that was financial management, but there were lots of kind of nudges that we were giving that we hadn't really appreciated. So a very simple one was when everyone comes into the branch and asks for a loan at Fair Finance, we would often say, it's not even scripted, just the question, are you sure? Is it the right amount? Almost like this anchoring challenge. And then we found we ran a test online where we tried to replicate that model, where we would anchor the amount at different places to get people to really think, is this the amount of money that I need to borrow? And we found that by adjusting the anchoring, we were very, very quickly, we were able to get to reducing the value, reducing the amount that they borrowed. So from your side, you now capture so much more information. What is it that you're seeing in terms of nudging or behaviors? What are the upsides that you can use for this data?
So we trained the employee in the store to think about the nudges that were important around like the loan value, the way the rate was conducted. So in our original product, the product we made us successful was called Bonus Reward, and that product was a product where your rate will go automatically if you paid on time. So there was no penalty for paying late, but every time you paid on time, you ticked you got 10 points. Let's say when you get to 60 points, you're unlocked like an automatic rate reduction. And so we found that doing these type of things online is much easier than doing that, in a face-to-face environment, because that the human element was always coming and making the process fulfillment much more complex. So we had people coming to us paying 1 day late, but they realized that because they pay 1 day late, they lost on £100 of cash back. So they would talk to their best friend in the store, and the store will call and say, we need to make an exception. So we found ourselves always like trying to fudge with the system, trying to find exception, etc. So we find that if you want to create rules, and you can make them less hard than the one we had before, it was a 0-1, it was a binary rule, but actually you can play and do a lot of, you talk about randomized controlled trial there, you can do much more in terms of data. Some of the recent things we've done is like testing people's desire to save and then setting objective on savings just by a nudge, which is like, are you coming for borrowing? And we asking you, what is your objective? And people saying, I'm always finding myself short of money. Say, okay, develop a new habit, saving small amounts, trying to shoot for £10 saving in the next 6 weeks. By just ticking the box that this is their objective and coming back every week sending a text message or sending a push notification. So where are you on this? And at the end of the 6 weeks saying, have you achieved it? Yes, no. The fact that they have achieved and they've engaged with a nudge over 6 weeks has a pretty high correlation to repayment behavior. So you get a lot of opportunity to actually engage with your customer on things that are way beyond lending and borrowing through an app in a way that is more consistent. The difficulty we had with the store before is that some of our employees were doing it very well, but some of the consistency of the delivery of nudges and learning was very wide. And you constantly retraining, and then you don't get the data clean to see if it's actually working on customers. So I found that, to your point, you can do much more, but you need different skills to think about how to engage with these the UI UX element of the customer engagement and presenting yourself as more than a lender.
Yeah, and maybe I mean, obviously some things went well, right? Some things 2-year process of transition. There must have been some pain points. Maybe there are some pain points you could share about that journey. So I think I'd love to pick up on the people side of it, but I think maybe
The two biggest pain points were, one was people. So the reality is it's very difficult to change an animal, its culture, etc. So we were a very strong retail business. The hero in our business were the underwriters. They were in the store. It was not a call center. It was not, so everybody was at the service of the underwriter, the training team, the HR team, etc. And as soon as you automated that, I think we probably destroyed most of the culture in the business. What saved us was the mission. The mission stayed the same, but the reality is we had that 2-year period I've described was painful just to get the performance to be at the same level as before. But during that period, we had the worst the worst, Glassdoor review, because people were losing their jobs. We were trying to hire engineers and product manager, but we were not seen as a fintech because we still had branches. So you're trying to hire people and you're competing with Monzo and Revolut, and people saying, no, you have branches, you can't be a technology business, So we end up attracting lower talent than the competition. So it took us a while to get to the right team. So if you have lower talent, the same development takes twice as long and you have more errors and you have to redo it again. So we had a very painful how to reinvent the business. And as we were losing the people that had made us successful before, also emotionally painful, because we had to tell people that didn't do anything wrong. They were performing very well. It's just the business model had changed and made them redundant. So to give you an idea, we had 300 staff, of which about 180 were in stores and about another 50 were in call center. The 180 in stores, they all gone. Yeah. The 40 in the call center, initially they went up to about 40, but now, as we continue to automate and people use more self-service, it's only 15 of them left. So from about, you're talking 230 people, we have 15 left operating. So it gives you an idea of how much productive you can be. So that's great for the consumer because we can now, truly fulfill our mission, which is, it was not just access, it's also can you deliver a more affordable product. And the biggest challenge for a lot of MFI, for doorstep lender, for all the people operating in a sector we're trying to get financial access is not credit risk. The biggest challenge is the cost of the last mile, the cost of distribution and servicing. So we've been attacking it and reducing it aggressively, which puts our business in a position where now, between someone taking a loan and doing the second repeat, we can reduce their rate by 75%. And the best rate we offer today is about 25% better than the best rate we had, before the transformation. So we're able to, be much more aggressive on pricing and reduce the poverty premium, which was always what, drove us. But we had the imperative of being, cash positive because, and hopefully profitable because we're a commercial entity. So if your cost base is too high, if your distribution base is too high, you end up pricing very high.
I mean, I often joke at Fair Finance, because of our structure and our funding model, we can basically afford to make one mistake every year. That's it. That's all we can afford. And I'm going to guess that journey must have, you're very good at what you do, but I'm going to guess you made more than one mistake. How do you?
Yeah, in this 2-year period, we probably made, so mistake number one was probably not going more aggressively about the choice of business model. So when we knew that digital was working, emotionally, we were still attached to the store network and we hung up with it for too long. So we ended up having to pay massive rent for stores that were not occupied. We had a store staff that were not productive and we had high salary there and we were not able to invest enough on the technology. So we didn't back our bet strong enough because there was this emotional attachment to the past. That was error number one. Error number two, we probably underestimated how long it will take us to get the underwriting for the first wave to work. So going digitally, we lost a lot of money to fraudsters and others. And that cost us, we breached our covenant and, you were aware of it, Faisel. I lost the business for a few months because, we were taken over by our debt provider. So we had to get the business into a position of administration. So I had to go and raise money and buy back the business from other owners. So that's the ultimate mistake, so that's just, I had lost the business I had created. And then the third one was around, managing, it was just so much. At some point, there was so much change. There was not, I could not control it enough because I didn't have the senior team that had that experience. So we got into a position where everybody was just burnt out. The culture became negative. So it took us a while to rebuild it. So when we met, I think 18 months, 2 years ago, when we were in the middle of trying to raise money to rebuy the business, I had like a team of senior guys who were pretty soul destroyed, from having built the business from 0 to 1 and being taken away because they were trying to do the right thing from the customer perspective, but we didn't anticipate how difficult it would have been.
And that, I mean, I can't imagine anything more soul-destroying as a founder to have the company being that way, or at least being forced into doing something. But what has got me through the various down cycles at Fair Finance, the liquidity crisis, the challenges that we've had is a core team of people who really believe in the mission and actually keeping them on side to know that what we're doing is for the right thing and building the strategy and the plan and working with that. How did you do that? I mean, I can see my team, it's here, right? It's 40, 30 people, but you were like 300 people at one point. How did you keep that mission strong? And I know you talk about the challenge of the culture, but when it gets that big and then having to go through this rebirth,
the two things that saved us was, number one, the loyalty of the customers we had. So when we went through this difficult period, I was surprised by the number of messages, letters, everything from these customers saying, "Oh, we heard that Oakam is going through the administration. This is terrible." Da 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 da. And the second thing was we always hired people that were like our customers. So when we set up Oakam, of these 180 people in the store, they were all migrants, single mom, people who came out of long-term unemployment. So we hired people that knew nothing about financial services, but they knew a lot about the community they were working on. We trained them on how to become underwriters, but they cared deeply because they could see that the people in front of them were exactly like them. So when, what you get there is the mission is not just a mission statement, it's actually something that people believe in their guts, and it has really helped us when we're going through all these troubles. So these are the two things that saved the business. Is, it was always, people knew that they were doing something that was beyond just a job. They enjoyed it thoroughly. And even when, today, we have a set of alumni, all these guys who were underwriters in the store, they found great jobs in other, because they have, in financial service these days, it's very rare to have a job where you have that much responsibility. So we train people who were, as I said, people who were long-term unemployed, or they were just selling sandwiches and a pret-a-manger, but they had great service attitude. They could speak, they could connect with the community we were serving. And at the end of it, when I look at all the, the hundreds of alumni from Oakam we have and where they've ended up, some of them work at FOS and at the FCA, at HSBC, etc. So we got them, same thing as we've done with our end customer, we got them the leg up into the financial sector service, and for us, we transformed, but that knowing that we had achieved something together, helped us survive through the crisis.
Yeah, I definitely feel that's one thing. It's
some of our employees ended up with you, Faisel. Yeah,
like I was going to say, one of the things I've seen, at Fair Finance as well is, one, you have to be able to attract great talent, but also you've got to be able to convince them and train them, because in some ways, at some point they're going to go somewhere else. And a great outcome for me is that people go to something bigger and better. Now, there aren't many better things in Fair Finance, but it's great if they can do and find somewhere down there. And I suppose it brings me to a question around, what's really important that I've seen in Fair Finance, and that I think everybody will see who comes here, is that we talk a lot about the mission, we talk a lot about the impact. And I'm going to throw the question to you. How do you get people to talk about the mission and the impact, or do you? And also in an environment where, I have the benefit of, I'm a non-profit structure, you're a commercial structure, so you have financial imperatives. Your APR is higher than mine. You have to engage in a commercial world. How do you address that question of high APRs? How do you address the question of getting them to see the mission? And what do you, when you think about impact, what is it that you're communicating?
Okay, so for employees, it's actually been much easier than I thought it would be, because I think it's just contagious. We've had people who said, "Oh no, I don't want to work into the high cost sector, so not interested." It's fine. But what we have is, like, people come and they might just be saying, "Oh, I've seen your website. the APR is high, why? And what we do is like, they have conversation with people in the front line, and then we put them on the phone with customers. And I had the same example with an investor about almost 2 years ago. We had an investor who, didn't really need the return. She's from a very wealthy family. She came and she said, listen, she's invested a lot in microfinance in Southeast Asia, in Sub-Saharan Africa. So she came, she was intrigued, and she's, only due diligence is she wanted to come into our collection department and listen to calls for an all afternoon. So she said, listen, for us, the most important thing is reputation. It's good if we have an upside and we have return, but what I can't do is land into a business that creates reputational damages. So she didn't talk to any of the senior team. She said, I want to have access to your collection team, and I want to spend 4 hours there. She went and spent 4 hours and listened to people calling because they were saying things like, listen, I don't have any cash to put food on the table, I can't repay the loan, and just reading, seeing how we were dealing with forbearances. And then, the whole emotion around these conversations and how our staff were dealing with this. And she came back, and that was it. That was the end of her due diligence. At the end, at 5 o'clock, she said, okay, I'm sending you the check tomorrow. That was as simple as this. And we have the same with employee, which is, the one that we found the hardest to hire are people that haven't had the personal experience of actually dealing with the consumer we're dealing with. So when we hire people that are coming from migrant community who grew up in a council estate, or, these employees, they said, you don't need to explain things to me. I know it. My mom used to use a Provi. I know exactly how painful this can be. I understand what you want to do here, and I want to help. When you have people that haven't had any of these connections, they need some education. So that's why we send them to see customers.
Yeah, I have to say, like when I launched Fair Finance, I priced the loans at 19%, thinking that was expensive. And today we're charging like 149 for new loans, which tiers down to 99. And probably the biggest challenge I had was convincing the non-profit sector that this was viable, responsible. But the challenge I didn't have was convincing the people who came through the doors, because like you, we employed a lot of former customers, some of your ex-staff and other people who've kind of been in the sector. And so when you know that market, it's clear, it's quite hard to recognize sometimes that we live in different environments.
And there was, first it's interesting when you see a lot of charities and trusts and foundation, investing in microfinance in Uganda or Congo, there's no such a thing as APR in Congo. People just, present the rate they want to present. So they present like an annual rate or weekly rate and everything. But you'll be surprised how many charities, MFI, get financed by trust and foundation that would, consider, micro lending in the UK as like extortionate, but they're lending at rates that are significantly higher in Congo. But it's okay because in Congo we are poor, So I think there's also an element of understanding that poverty exists everywhere, and there is a cost of distribution. So I've always made the point that it's actually harder to do micro lending here because with the regulation hurdle, with the fact that I have to buy a credit bureau report, even though I know that for 50% of our customers, it's worth 0. And for the other 50%, it might be worth, a tiny bits of information, but I'm buying that data because if I don't, the regulator will tell me that they didn't do something that was responsible. Yeah. I have to put process and procedures in place to demonstrate that I have checked affordability, even though I might have a model. For example, the example I gave earlier, Faisel, you're a customer of ours. You brought us 90 customers who are all perfect payer. You bring the 91th, even though I know that actually what you've done is by going to your community center, we had a lot of people, for example, bringing in customers from their own church, etc. So they had this element of peer pressure they were dealing in their own side, yeah. But we still had to take them to a process just to have the documents so that the regulator was happy that we had done due process, yeah. So even though our model was, strong enough. Oh, I've lost you. Hello.
I can still see you, Fred.
Ah, okay. I lost you for a second. So this whole point of APR is an interesting one. There was a Joseph Landry Foundation did a study, I think, a few years ago. Remember, I think we talked about it many years ago when there was the introduction of the rate cap in the UK. And they looked at how much it will cost to replace the Provident of this world and said, they came out and said, it'll be very difficult, even for a non-for-profit, to do this type of loans, £200 loans, for example, at less than 120%. Now, I think it's going to be interesting to redo that analysis because actually with smartphone and the data we get, I can bet that we can do it for half the price. Because back then, we all assumed that to do micro lending, you needed to do the last mile with a branch or an agent going on a moped somewhere, you know, in the suburbs of Kampala or whatever. So that's why I'm excited by what we've done. Was painful, but it's actually demonstrated you can do micro lending, small loans, in a much cheaper way if you're leveraging technology. And smartphone is probably the biggest revolution there'll be for micro lending, not just in the UK.
Yeah, no, that's definitely really fascinating. I totally resonate with that. I could go on for a long time, but I think I'm going to close there because I know we've got limited time, and I've just seen my messages ping up about 1,000 times with a million questions. So maybe I pause there and say thanks, Frédéric, and maybe we pick up as the questions come through, and hand over back to Sasha.
Brilliant, thank you.